Hi, everyone. Welcome back to another episode of Chasing the Bag podcast with Bade and B.
Hi
Bade, how
guys,
you doing?
good. It's been a good week. We dropped, I think, this week. Yeah, on
Yeah, we
Monday.
dropped on Monday. So I think Mondays will be our new release schedule.
Okay, that's good. We should have it more consistent so that our viewers can know what to expect.
Yeah, absolutely. And this is a special episode. We have a special guest today.
Yes.
One of my ogas.
Please.
So on this episode, it came about with Bade suggesting that we do like a recap on cryptocurrencies last week. But then I said,
Okay.
I have a crypto expert. I have an
Mhm.
ex-Binance person. I have one of my very good bosses here at Oxford, and I think he will just be the best person to give us more insights into like what crypto is, where he sees it going in the next few years. And yeah, so let's welcome Oluseyi Adebiyi.
Thank you. Hi guys. Hi B. Hi Bade. It's good to speak with you guys today. I'm so happy to be here and look forward to all that we'll chat about today.
Yeah, we are so happy to have you. I mean, I already hinted that you are the crypto expert and ex-Binance, but can you tell us a bit more about how you got into this crypto journey and like what it has been like for you?
Okay. Thank you for that question. I would say that my journey before crypto started in finance and banking. I worked in traditional banking in Nigeria, traditional retail or commercial banking in Nigeria. And what that entailed was it entailed money movement. It entailed working with money both for individuals as well as small and medium businesses. But along the line, sometime in 2019, 2020, I started becoming a lot more curious about the whole conversation around Bitcoin. I think a lot more in 2020 when Bitcoin hit 60K for the first time, and there was like an active conversation around it. And the initial reaction as someone that worked in traditional finance was, oh, it was just going to be a fad. And so I expected that it was going to just fade away in a short while. But as it began to grow on me, I started to take it a little more seriously. And the question I asked myself was, what if this was the future of money? What if money was truly becoming a lot more digital? Would I be one of those that would likely miss out on that trajectory? Or would I rather just latch into that movement, understand what it's about, and be like one of the active facilitators of its growth? So that was how my journey into crypto kicked off. Ironically, I got into crypto at the time when the Nigerian government was issuing a ban on
Yes.
crypto. So when we had the bank ban, where the central bank at that time had said that commercial banks should not allow crypto transactions to pass through their system. That created an opportunity for us to then build a new system of operation, and that was where peer-to-peer networks started. And I led a product that is called CashLink. Very successful product at the time, currently being used in some other clients. I may not mention the names of the countries, but
Yeah.
it was pretty successful. And so I would say that was how my crypto journey began. Leaving traditional banking, diving into the heat and chaos of the blockchain world, and now seeing all of the growth that has occurred in the last couple of years.
I think that's really, really good. That's helpful. And I think from what you said, you thought about it more from the innovation,
Yeah.
technology standpoint. But I know a lot of people that's been involved in the cryptocurrencies, Bitcoin, Ethereum, and the like, or entered into it for the investment, the return. Did you
Yeah.
ever think about it as like an asset class, or did you just solely, love, like, this is the future of finance, being a former TradFi person, and now we see where the world of finance is moving and technology innovation that will be, be really helpful.
Yeah, I would say thankfully, when you join a firm like Binance, what happens is you are not really able to trade actively. So
Interesting.
you are not an active trader. What that did was it helped us stay focused on the mission, wherein we're not just there for the inflationary opportunities. It did not mean that you could not own assets, but you could not, actively do a lot of movement, a lot of asset movements. But beyond that, I'm naturally a curious person. So one of the things that I found out in the course of my research about crypto was the fact that every phase of the internet had the key drivers. So we had Web 1. Web 1 was where you would go online and you just view and read internet pages. Along the line, Web 1 was scaled further, wherein you could fill a form. You could expect to receive an email back. There was also some elements of internet messaging. So the days of Yahoo Messenger, MSN Messenger, and the likes. Web 2 then became where we embedded elements of social in it. So there was an element of first social. There was then an element of e-commerce, wherein you could then place an order on Amazon for books at first. You could place an order if you're in Nigeria, you could place an order on Konga or Jumia. But Web 3 was now what crypto was based on. So the blockchain was based on Web 3. And for each of these elements of the internet, of the web evolution, there was an element of money in it. So there was an element of how did money also then move with that web. And Web3 then became that sophisticated layer wherein we could then see like a clear case of how money could move in a more digital form, in a more tokenized form. And at that time, I would say that there was a significant evolution that was going on, wherein beyond all of the noise of inflationary assets and the to the moon and all of the claims that were being made, there was also a lot of innovation that we expected Web3 or crypto to bring about. Take, for instance, there were innovations around learn to earn, where the expectation is if we're going to revolutionize the educational system, how about we create a product or a system wherein as you learn either a new subject or, as you get educated in a particular matter, you likely would earn some token or some coin and things like that. And this was used across like many projects to help gain interest, but also to then see it as a pathway to improving other areas of humanity. So back to your question, I would say that was how I approached crypto at the time. Yes, somewhere in me, again, I wouldn't say that I didn't expect to have some inflationary benefits, but the overall objective that I had was mainly from the wider impact that was supposed to have on humanity at the time.
That's very altruistic.
Yeah.
Most of us, when I got into crypto, was to the moon. Well, back in 2020, one of our colleagues back when we were working, myself and B, just introduced me to it. And at that time, I think the year before, 2017, Bitcoin had gone to 20K. That was like the highest.
That was the all-time high at the time.
Yeah, at that point. Then I entered in 2018 and the thing just went back to like 4-5K. I removed all my money. Yeah, that's good. That's really good.
I mean, just like keeping to like the price of Bitcoin, right? I would say maybe I'm still a bit on the fence in terms of cryptocurrency and like its utility and what it is going to be in the future. Is it going to be the future of money? So I would like to know like what you think about that, like the case for cryptocurrency as opposed to like the traditional cash and traditional banking system, the centralized system. Like what is the case for crypto in 2026 as you see it?
Yeah, I would like to backtrack a little and change the coinage in this case. Not necessarily focusing on cryptocurrency as a concept, but focusing on blockchain as the foundational technology, right? And the reason why I choose to backtrack is because beyond cryptocurrencies as an asset, we are beginning to see a lot of benefits that the blockchain as a technology sort of provides. And if over the last few months, especially I would say in the last 6 months, there's been a lot of traction wherein a lot of the major traditional finance and traditional payment organizations are reaching some elements of a convergence. So about 2 months ago, it was in the news that the likes of MasterCard, Visa, Coinbase, and a few other companies had come together to create what is called the Open USD. And the Open USD was based on the element of what stablecoins has done. And stablecoins is something that I've worked with or worked on in the last, I would say, 3 years, wherein it has become a source of many things to different people. First of all, for a lot of people that are in countries where there's a high chance of currency devaluation of their local fiat, stablecoin has been a good source of preserving value. For many of those that have needed to do cross-border trade in some cases, stablecoin has helped them to achieve a lot more quicker trades, even across larger volumes, versus what the traditionals provided, where you needed to wait T+1, T+2, etc. And then the third case was there was some element of interoperability, wherein people are able to easily move between stable coins and global fiat. So, for instance, we had cases where people are able to use stablecoin cards to make payments across the till for normal global fiat transactions. I, for instance, have a stablecoin card which I can use to tap to pay over a pound payment terminal, and it works.
Yeah.
So
I remember the demo that you did.
yeah, exactly. So the narrative around cryptocurrency, it doesn't mean that there are no current inflationary assets, but I always liken cryptocurrency assets, Bitcoin, Ethereum, BNB, and the likes. I still liken them to how the stock market moves, wherein sometimes they are driven by fundamentals. Other times they are driven by other social situations. I would say that in the last 1 year, we've seen a lot of movement. We've actually even seen a lot of similarities between the global capital market and the crypto market, wherein when you check your portfolio for global capital market, it's all red. You check crypto as well, it's also all red. So overall, I would say that cryptocurrency as an asset class as sort of the direction of that has sort of been changed, wherein the focus is no longer on the inflationary opportunities it creates, but also in terms of the efficiency that a product like stablecoin also helps with for global commerce and global payments.
Yeah, absolutely. I love that reframing. And I agree with you on that. At sometime a couple of weeks ago, I was seeing that there's been an interesting development on the New York Stock Exchange wanting to have like a platform for 247 trading of
Yeah,
stocks and ETFs. And I was
mm-hmm.
like, that's interesting. So the market won't have to open and close anymore.
Exactly.
And just like traditional assets, stocks represent them on the blockchain. So
Mm-hmm.
can potentially trade around the clock and even settle for much faster time than the traditional way it's been done. And I
Yeah.
think the conversation has gone from the case of will Bitcoin go up to like what other pieces can we get out of this technology?
Yeah.
And what do you think about that? If you have any reactions.
I would say that with the cryptocurrency, the US is still one of the largest markets for all trading activities, right?
Yeah.
Including
80% of the
cryptocurrency
global
trading.
volume.
Yeah. And one of the things that is also leading the direction of cryptocurrency is the activities that the US starts to enable. First of all, it was signed into law that people could trade, Bitcoin ETFs. And then much later, we then had things around the Genius Act. And if I talk about the Genius Act a little, you realize that what the Genius Act enables is that for every dollar of stablecoin, there is a dollar of fiat that backs it up either as treasury bills, as repositories in banks or other investment sources. So I would say it's still a win-win because based on the structure that is now being created, it means that the business environment is very much aware of all of the things that have happened with cryptocurrencies over the last few years, where there's a high chance that people lose funds, and now creating a lot more guidelines around preventing especially high risk investors from losing their money. And I would say that how that now comes in to like the trading points which you raised is the fact that I think that all of these markets, one thing they see is the efficiency. Interestingly, even a provider like Swift, I know that I saw some news piece where it was stated that they are beginning to look at how they can even improve the architecture that guides their settlement system, wherein they can enable some either blockchain elements or even like tokenize some elements of the payment rail.
I mean, that's exciting. It is just impressive to see the adoption of the technology over the past, I don't know, the past 5 years. It is really changing payments, changing finance as a whole.
Yeah.
Yeah, I mean, I think a lot of our listeners may not have like the technical knowledge, or definitely not as knowledgeable as you in terms of cryptocurrency or blockchain as a technology. But for someone who wants to start, like the noob that does not know anything, what are the first steps that you would recommend? Like, do this 1, 2, 3, and you would have a better understanding of cryptocurrency, or a better understanding of how the blockchain works. How would you advise anyone to go about learning and understanding?
Well, I think that one word that we bandied a lot within the blockchain industry is not financial advice, right? So that being said, I wouldn't be advising anyone that is going into crypto, or any noob that is going into crypto and guiding them into actions to take. I think the first question that I would ask is, what are your goals? Like every other, productive activity, it's always a case of how do you begin with the end in mind, right? So if you are going into it for trading, or if you're going into it to just utilize elements of the blockchain. So we have people that all they do on the blockchain is just make payments. They go about their normal course of business, but they realize that there's some better efficiency with stable coins, for instance. So they hold stable coins and they're able to use it for all sorts of payments. We have other people that are still optimistic that there's a chance that they'll find some assets that they can take from zero to perhaps
The
1,000x and make generational wealth.
Yeah.
Again, one thing that organizations like the FCA in the UK, the Financial Conduct Authority in the UK, has done is to release guidelines that sort of, provides a framework wherein high risk users in this case are people that they may not necessarily comprehend how the markets work, and they then put in funds based on like some emotional suasion and end up losing money. And there are a number of guidelines that they have put in place wherein there's some element of positive friction. You sign on to a platform, you're not able to trade for 24 hours as a cooling off period. There are risk warnings on those pages where you can see it clearly that you can lose money by investing in cryptocurrency assets. And then there are like other like things that are done so that there's full clarity. The point is, there really is no guidance that I can provide to someone that wants to go into trade, because not financial advice. Nonetheless, I can say that use stable coins. They are a very efficient means of going about your day-to-day transactions. Use stable coins. They are an efficient means of going about cross-border payments. Use stable coins because, well, it's a digital currency and the future of the world is really going digital.
So in essence, you just said,
Awesome.
do your own research.
Clearly.
Also, I like that. I like that. So I don't even know if it's even still worth going to this. We already spoke about the speculative drivers and how the price of crypto, especially Bitcoin, has kind of mirrored the US stock exchange over the past year or so, right?
Yeah.
So with about this time last year, Bitcoin was 123,000.
Mm-hmm.
And right now it is half that to 62. Yeah, just general thoughts on that before we just transition to more closer to home topics on cryptocurrency.
Yeah, I think that one of the things that resulted in the rally that Bitcoin experienced last year, and it wasn't even about this time last year. It wasn't about this time last year. It was sometime in November 2024, right after President Donald Trump's election. That was when the rally began, and it was largely because of social speculations that, because in the course of Trump's campaign, there was a lot of like positive support for the blockchain industry. And hence there was that intonation that it was the cryptocurrency industry, blockchain industry was going to now become a big deal. Hence, a lot of people did not want to miss out on whatever that would translate into. That was what resulted in the rally. Again, it meant that it wasn't driven entirely by clear fundamentals. It was driven a lot by FOMO, fear of missing out by lots of people. And what then started to happen was, which a lot of people don't talk about, was as other players started to create sophisticated products on the blockchain, the incentive to hold single assets or single stock on the blockchain further reduced. I'll give an example. So you have players like BlackRock creating, BTC ETFs or creating all sorts of, ETFs with crypto. What that means is rather than going to the market and buy Bitcoin, how about I just buy an ETF that is a crypto ETF, and depending on the movement of the stocks within that basket, there's a chance that I'll still like be within very good risk limits. What that resulted into was we started to see liquidity move in a different direction. Liquidity was no longer within the space of retail everyday trading. I was moving a lot more into institutionals. And as liquidity left the system or left the retail trading platforms, it then created, the resultant, fear factor where a lot of people were now beginning to dump their holdings. So again, it's a mix of many things, not entirely fundamentals, but mainly a mix of like trading activities that then influenced a lot of panic dumps. I'll end with the fact that for anyone that has stayed long in crypto, one thing we always say is that the market will always correct itself. So that being said, I believe that we are currently within a correctional phase. We are seeing like the true state of the market, and there would always be another cycle that would come up, or another rallying that will come up. So this is not the end of Bitcoin. This is not the end of crypto assets. There would always be another rallying.
Yeah, I think I agree that the institutional adoption doesn't mean like the assets, Bitcoin and Co will keep going up, and it might also reduce the margins or the benefits gains that retail investors might gain from it. So
Yeah.
Interesting times indeed to be in the whole investing space or to be getting knowledge like this. So transitioning closer to home, last week, or was it the week before, there was news that the Nigeria Revenue Service is imposing stamp duty tax on sale of crypto assets, digital assets in Nigeria, and also 7.5% VAT on like accessible services. Yeah, I was speaking to someone this week. He is considering applying for the Oxford MBA, right? And one of the things that I mentioned about the postgrad settling in the UK thing is taxes. And I just noted to him that Nigerians as a whole, we are not the most familiar with taxing or like taxation. So like the way the world operates, because Nigeria is kind of an anomaly, is that any sort of tax to any sort of system, we're going to kick against it. So taxation of the cryptocurrency and digital assets. By the way, what was your reaction to that?
Yeah, I think it's like Mr. Sheyi said, Nigeria's crypto journey has gone from banks shouldn't touch it or should ban accounts that have crypto transactions associated with them to now let's tax it. And my first reaction was, why is this the case now? And the backdrop is that Nigerians are one of the largest adopters of in the world. I think one of the top 20 countries. And I think I saw a stat somewhere that between 2024, mid 2024 to the end of 2025, about $92 billion transactions were performed in Nigeria. And this was from Chin Analysis. And it was like, wow, it's obvious that the big reason why this was started or is being implemented by the government is for revenue. And we know that the new government administration has been trying to find ways to bring money in, and they see this as another big opportunity, and let's go into it. That's one. Two, I'm thinking, how will this be implemented? How will you get compliance? And I don't have the answers, but I know it's going to be very challenging for the government to implement and regulate this new tax. Yeah. What do you think about it?
I think, like you said, where you landed, where they would likely face a significant challenge, I would say that the major challenge is recognition of this transaction. Just like we talk about in accounting, where you're defining where you want to recognize a transaction, right? The typical expectation is the government is going to place the burden on the platforms, wherein the same way when they want to charge VAT on transactions, is the bank that is responsible for making those deductions. That's the same way they would expect platforms to, effect those transactions. But the worry that a lot of people have is how to define the tax structure. Because if I just did a transfer to another wallet, how would you recognize that transfer? Wherein I'm in the UK, for instance, and someone that just happens to travel into Nigeria or that uses some crypto wallet account that was KYC'd in Nigeria, will it be a case of if the person does a transfer to my wallet, would that be recognized as a valid transaction to be taxed? Right. So I think that there's still a lot of work that would go into mapping out how the tax regime will be interpreted. It may be quite difficult. We still do not have any registered exchange. There's an approval in principle that has been granted to a few players, but there's then like a 12-month observation period before they then have a full license. And I'll just finally say that a lot of us are still struggling with the decision of the government, but the truth is it's inevitable, right? Transactions cannot go on under the radar without being identified, without being mapped, and without finally being taxed. Gone are the days when the government resisted anything that had to do with crypto. Now they're beginning to embrace. The only question I have is it a little too late? Mainly because a lot of players have moved away from retail trading. A lot of players are no longer in the B2C space. A lot of players are moving a lot more towards B2B. Although that in itself is a benefit to the government because with B2B transactions, it's a lot more structured. There's clear visibility versus fractions of transactions that go on with B2C. But it's still out in the open for us to see how the structure evolves.
I think it's going to be very challenging for them if people decide to have self-custody or just resort to informal P2P channels or majority of the transactions they are doing. You are not going to find any of those transactions.
Yeah, but even with informal P2P channels, it's about tracking the transactions on the blockchain, which is where the key challenge is, right? Because if we're all using decentralized wallets, then it becomes difficult to track because how do you track it? The only way you can track is if we're all using platforms that, has access to our transaction history because it's centralized. So again, the jury is still out there.
Implementation is going to be an interesting one to keep an eye on.
Yeah.
This one to keep an eye on. So the next topic that we are exploring is the blockchain infrastructure company that raised some strategic funding from Standard Chartered Bank. And I think that also goes back to what you mentioned earlier, Sheyi, that a lot of these bigger banks, institutions are beginning to embrace blockchain.
Yeah.
Yeah. So they raised 40 million to expand their operations outside of Africa to Latin America, Asia, parts of Europe, and basically just build us the infrastructure for Africa. I think that is like good news for anybody that is in that space, right? To see that amount of funding coming into the space.
Well, I think it depends actually. It goes back to the point I made about businesses moving away from B2C and
B2B.
moving a lot more to B2B. This entity itself that we're talking about, they also made an announcement that we're shutting down their B2C operations and focusing a lot more on B2B. So there's still going to be a need for time to pass by to really see how they want to execute that playbook, regardless of whether they raised or not. It's one thing to raise, it's another thing to then begin to generate those transactions and a fair margin on it that then translates into revenue and eventually profitability. Because again, in the industry, there are so many players that are all chasing the same bags of B2B.
Pun intended.
But I think also this year there's been like a lot of investments from stablecoin companies in African fintech. I remember Ripple invested in Flutterwave.
Ripple and Seco.
Yeah, and that invested in LEMFI,
Yeah.
and they're just creating, the infrastructure to make it easy for adoption, especially for people to transact in their daily life. So for remittances, for payments, for Flutterwave, and it's good. But to your point, the reason why a bank like Standard Chartered is interested is because they see that there's value in the blockchain
Yeah.
technology and in stable coins, and they want to integrate it into their own system, which will mean that at some point they want to accrue the value to themselves, which
Mm-hmm.
is what all big companies do. So yeah, it will be helpful.
I think the customer, I think eventually the customer would still be a great beneficiary of what is happening, because eventually the customer sees the efficiency that this creates. The customer is able to transact a lot faster. If you look at the way international trade is done today, there are still a lot of manual processes, especially large scale importations where you're importing with containers. Requires, it's one of the things we call documentary transactions. So there is a lot of correspondent banking transaction where, are you raising a letter of credit? Was the element of interaction between your own bank and the correspondent bank? Are you, when your shipping goods arrive, what are the documents that you are showing to the port authorities to allow you clear those goods? So I would say that that's the final piece that has not been fully unlocked with enabling stablecoin transactions for international trade. And that's mainly because there's an element of a central bank process that is involved with these transactions, right? Once the central bank creates another level of efficiency that allows you to make a cross-border payment of such volume with stable coins, and where you can then like back regularize and still be able to get your letter of credit, for instance, then it unlocks a lot more value. I read an article on Harvard Business Review a couple of years ago, and it talked about how traditional organizations would always fight any new technology, would always the incumbents would never let go without a fight. And because that's equally a significant business area for them, I do not expect that they would sit and watch the central bank just handing out their breakfast or lunch to other players. I also saw on social media recently where someone said that banks were now beginning to advertise for form Qs. So what a form Q is a form that allows SMEs, small and medium businesses, to access up to 20K, I believe, from the official market, and to pay for like all of the importation needs. About 2 years ago, it was so difficult to access a form Q.
Yeah.
But now it's a lot better. So it means that, the bank can smell the coffee. Although, yeah, the central bank has made things a lot better, but the banks can still smell the coffee. And in this era of willing buyer, willing seller, it will be interesting to see how stablecoin also then creates a further competitive element to it.
Yeah.
Awesome. Thank you for breaking that down.
I think the next topic for us, B, you sent me a video and of the two biggest Nigerian fintechs.
We are transitioning off cryptocurrency. Yeah.
Palmpay and Opay, and these companies have done really well in Nigeria, and they happen to be IPOing abroad, and that's a huge debate for Nigeria and the Nigerian economy and these companies themselves. So, what do you think is the reason behind their decision, and what should Nigerians care about? What should our audience care about with respect to that?
Well, I would say that conversation is actually a very interesting conversation, especially for the markets. And one of the things that I suspect may have driven that direction is the nature of investors. The average Nigerian investor prices their investments in your company on historical returns, not necessarily future returns. So I'll give you an example. The valuation of Palmpay and Opay, I think, is maybe about 40 billion, thereabouts. And so if I have a slice of that company, yeah, It means that the question is, how much will they then sell a stock? How much will I likely earn from that stock in the first 12 months, in the next 24 months thereabout, versus if I'd just bought a GT Bank stock and I knew that there was a guarantee that I'll earn what dividend they paid this year? 12 naira, 17 naira, thereabouts. And I think GT Bank is currently valued at maybe 3 times book versus Opay that wants to be valued at maybe well over 10x book value, because in the real accounting terms, they are not yet a profitable enterprise per se, or maybe I think they just recorded some elements of profit versus other Nigerian entities that have had multiple years of profitability. But when you then take that same business to list on an American stock exchange, the average American investor is investing based on future value, right? They are more sophisticated markets, and once they understand what the fundamentals of your business is doing, they believe that, okay, I'm going to put my money in here, regardless of whatever the S&P 500 is doing, or regardless of what other existing stocks are doing. I believe that there's some element of, returns that I'll gain. I calculate the NPV. I see that, okay, it's still value for money. So I would say that it's a mix of the nature of the markets. A lot of people that are crying wolf about it, or they're crying out loud about not being able to invest. I don't think that they would really love to invest at the price that they would want to float, those equities.
I see the validity in your like argument, right? But I mean, a lot of the discussion in the African VC space recently has been about these companies or like exits not staying on the continent, right?
Yeah.
And when we look at fintechs like Opay and Palmpay and the volume of or percentage of their revenue that comes from Nigeria, I mean, it is venture. I can see the cry in a way from the NGX that, we deserve to get off the gains of this, right? Because this is where you reaped a lot of your revenue. I can imagine that if an Opay was listing, maybe not fully listing, but like dual listing on the NGX at the same time as like listing in their home country, or like, I don't know if it is in Hong Kong that they are trying to list. I'm sure that a lot of people are going to buy into Opay, right, from Nigeria. Not just the regular retail investors like you and I, but like a lot of institutional investors that missed out on the venture raises that they've done before listing would want to key into that. So I get the cry from the NGX or the Nigerian Stock Exchange. But at the same time, the risk that comes with venture, Opay could have fallen flat on its face and failed in the Nigerian markets. And whoever had put up the millions and millions of dollars to fund this venture is left with nothing at the end of the day. So they want protection for their own investment as well.
Exactly.
They want to come to the more established markets. They want to return to, where they have more guarantee of their investment. Nigeria still carries with it, or like venture investing in Africa still carries with it the sort of stigma of the continent. People look at West Africa and see military takeovers in countries that surround Nigeria. They don't have the context of safety in Nigeria. It is still hard to estimate for them. I'm just putting my VC or angel investor hat on and I'm thinking, I want to get my money out of here. Maybe sometime in the future when there is growth, maybe we can do some sort of extension of our listing to their own local markets as well. But then it will be altruistic coming from the venture side. So that is where it then falls on the regulators to kind of enforce this, which is very tricky because I'm seeing like a double-edged sword where it could also deter future investors into Nigeria. It's like, whoa, if we want to exit from this space, we are then mandated to do it on their own terms and in their own market. So yeah, it is an interesting one to wiggle around.
Yeah, so I absolutely agree. The company, they don't have any, they're not beholden to Nigeria. They're not patriotic. They have their investors to find the best markets and get the best valuation for their investment. And that's what they do. And if Nigeria tries to start, making stringent rules, it will also, be very interested in coming to start in Nigeria to start with. So I think it's a balance of having to make Nigeria an attractive destination for some sort of dual listing, have better disclosure standards, ensure that there's more investor access, currency risk that is associated with Naira, reduce it. Those are the things that Nigerian government has to do to so you win them by making the market useful, not by having laws or regulations that will not be helpful for businesses
Yeah,
like.
but I think that in fairness to the NGX, though, the NGX has seen significant improvements in the last couple of years. And that, I assume, is why they're also making a major case for an opportunity for Nigeria and Nigerians.
Yeah.
It's still a double-edged sword, largely because in this case, we're talking about a business sourcing for capital, right? So it's not necessarily a charitable activity. It's about the business deciding as to where they would rather source for capital. There's an element of it that says that, oh, because you've made money from me, you should also give me an opportunity to be part of your business. But there's then the question of the existence or non-existence of a moral obligation. So are we looking at it from a moral obligation standpoint, or we're looking at it from a decision that is being made by the current capital providers? And when you look at it, the current capital providers may say that, okay, we want to exit part of our capital from this business, means that we want some, liquidity, some new liquidity injection, right? Where do we think we can get a better value for money? And, where do we think that the market would also support whatsoever decisions we want to make around this transaction? So I would say that it's a mix of two things eventually. There's that moral element to it, which is where the case for the NGX comes in, but that's what it is.
Yeah, and also it's not entirely bad. It's not a gloom situation if they list successfully on a foreign stock exchange. It can still be good for Nigeria if that capital funds more hiring, more product, more
Exactly.
expansion from Nigeria being their base will still help the economy.
And I think it's just interesting, like with this topic that we just discussed, listing on the stock exchange, how we just discussed it in our last episode, right?
Yeah.
And even this next topic as well, Femi Otedola, a few days after we recorded our last episode, and it was on Monday this week.
Yeah.
That's we got like another announcement that he's bought more shares of Crest Bank Co., investing another $12 million. And, he's making this strategic move towards 51% of the holding company and of, maybe one of the most prominent banks in Nigeria, the First Bank.
I saw someone's take on his moves, and person's like, what he did with Geregu, or he has done over and over again, it'll be very difficult to do in a highly regulated banking industry. And the CBN is not going to just give him a free pass and to, come in, buy everything up, make some changes, make a quick buck in a couple of years and leave. Because banking is the foundation of any economy. And if you have a very systemically important bank like First Bank being shaken by one player, one individual, they wouldn't want that. And they're like, the CBN is going to come in and try to make some moves to ensure that this is done well. Because also later in the podcast, we're talking about the after effects of this Geregu, exit and what they're now going through right now. Maybe not directly, but indirectly, they're linked to that exit. So it's very interesting.
Yeah, like you said, the banking industry is highly regulated. Sometime last year, a number of banks were prevented from paying dividends to shareholders because of the level of provision that had been taken for bad loans and the need for those provisions to be recognized. Because the position of the central bank was, if you have, a negative position, you cannot, be sharing funds amongst yourselves while carrying the negative position into subsequent years. And so the perception of the public is that the CBN has always been a strong arm within the industry, and they expect that there have been no stronger men or stronger banks that have been able to withstand the big weight of the CBN. So I think that still applies. I don't recall elements of the Bofia Act that sort of curtails what the current ownership structure can be. But I know that nonetheless, the central bank would always protect the systemic structure of the industry as a whole.
I think the CBN is one of the few regulators that ensures that Nigeria doesn't kaput.
Yeah, absolutely.
Yeah. I mean, so by the way, you already touched on it. Femi Otedola's exit from Geregu PLC last year sold his stake for $750 million to a group. And now, just 6 months after, they have defaulted on the bond. So about 6 billion of 40 million that was due at the end of July wasn't paid. It does not look well for Geregu following the exit of someone who's known as a great operator in the industry. And now new management has taken over. It is looking down. So, thoughts?
Yeah.
Well, I think it's quite unfair on Femi Otedola to say that it was his exit that resulted in Geregu's default.
Oh, you said that?
No, I said I think that's general perception of, or that's the general narrative that is being shared, that was that the move he was trying to make, divest from it, and then it kaputs. I would say that there's still an element of the management of the day taking responsibility for the success or failure of the entity they've taken over. And I say so is because if you look at the details of that transaction, it was first a debt finance transaction. And then they still, went ahead and paid dividend. And there were a couple of things that I think may have been, I don't have full, again, disclaimer, I don't have full details as to the transaction, but I believe that they likely would have seen all of the term sheets ahead of time and could have played, except if we're saying that, there was no clear revelation and there were lots of skeletons in cupboards that they were not aware of. But I believe that a deal of this nature, wherein is not a local market deal where we just shook hands and exchanged papers. It's a transaction wherein there were professional financial institutions that underwrote the deals, that also did all sorts of due diligence, as it were. So if we're going to pass buck, we're going to pass buck, on everyone that, was involved in that transaction. But nonetheless, at this point, it then becomes a failure of management, either to not have seen the evil day coming or to not have managed the books properly to have dealt with these transactions before they became defaults.
Yeah, I agree.
My understanding is the bond was issued in July of 2022, right? 7-year tenure at 14.5%. Like you just mentioned, right? Proper due diligence would have brought these things to the fore during the transaction period. And I've also done, well, not like investigative research, just like some Googles into the company or the group that bought over Geregu. And just to say, it's not like the most verifiable, There are talks around it being some of government financing, people that are related to politics and blah, blah, blah. I don't have the full details, but it's not like institutional operators, for example, did this big acquisition to take over Geregu, and it's more of like a play to just own an asset.
I think it was very clear. And from even the financials, I think in the first half of this year, my research, their revenue fell to like 18.5 billion from 87 the year earlier. And
that's a lot. That's massive.
And the company said that the reason for that was a shutdown to a major turbine. But for me, it's seeming like current management is not operating optimally as they should, which has then snowballed into this default. I just hope they are able to quickly resolve it, because I think I was listening somewhere they have maybe a couple of weeks to remedy that and bring the company back, to the good books of its creditors, because it's not looking good.
Yeah, Geregu is critical power infrastructure in Nigeria. Aside that something like this is happening, knowing that they wouldn't be able to meet their obligation, there are several routes that they could have taken, in just my own estimation, some bridge loans, debt financing, I don't know, maybe raise another bond to fill in the gap in the meantime. And also forecasting that, they wouldn't have as much revenue to maybe meet up with their obligations. So yeah, it is quite sad that something like this is happening to an institution like that. So 2 things on the global scene because we're almost at an hour. First one, Jeff Bezos is buying into the Premier League. By the what team do you support?
I'm an Arsenal fan.
Beautiful.
Dangote that wanted to buy Arsenal that year, was rumored to buy Arsenal.
Beautiful. All 3 of us are Arsenal fans here. This is so news going around the Premier League is that Jeff Bezos might be buying into, or is part of a consortium, a group that is buying 30% of Liverpool. From Fenway Sports Group. I'm like, that's cool. It wouldn't be the first billionaire. Of course, it's going to be by far the richest owner in the Premier League, but yeah, it wouldn't be the first billionaire. Reaction, guys?
Yeah, that's what these big boys do now. Like, after it made it big, I think on the deal, on the consortium is also Eduardo Saverin, the co-founders
Facebook,
of
right?
Facebook, and some other Indian billionaire. I think Amit Bhatia is his name. So for them, they're like Thanos, and they are collecting these Infinity Stones, and a sports franchise is one of the Infinity Stones they can collect at that level they are at. I don't think for them it's kind of like profit making, but they come in. I think Mark Cuban is very well known for doing that. Chamat too, that they come in and see how they can increase, viewership, bring in business, and transform the club or transform those sport franchises. Right now, I think Liverpool is valued about 6 billion. So let's see, maybe in the next couple of years they will turn it around. For some of them, it's turning around. For some of them, it's holding for life. So that's my own take. It's just billionaires doing what billionaires do.
Yeah, I think that in recent times we've had a lot more American entry.
That's right.
Yeah, American entry into football as we know it. There's always been that conversation around soccer or football. So I want to believe that it's not going to be called Liverpool Soccer Club. It's still going to remain Liverpool Football Club.
Yes.
But most importantly, I think that they are beginning to see, there have always been American owners in the Premier League. So the current case, for instance, and then like the Wrexham story as well, amongst like a few other, even like the current owners of Chelsea. But I think that there's now a significantly growing interest, given that we recently even had the World Cup in America. And that must have created a lot more reasons as to what the potential opportunities are. I do not want to believe that this was a purely passion-driven transaction. I want to see that there's an element of it that is also wherein they think that there's an opportunity to create something transformative that would also result in even more significant returns for them.
But does this mean that Liverpool will now start buying the best players and maybe next 2-3 years?
I mean, going by the announcements, they were quite clear that it does not affect this year's transfer window, at least, that there's no special bucket of cash that will be allocated to that, which is good to hear. They spent a lot of money last year, so they should hold on to those players. But yeah, like you said, the influx of American owners into the Premier League or English football, everyone, Birmingham has American ownership. Fulham as well, I believe they have American ownership as well, with the same owner as the Jacksonville Jaguars. But I'm seeing some pushback also from like fan groups, right? People that want to keep the game pure. They want to know the intent of the new buyers. They want to know that they're going to be focused on winning trophies, not just making more money. Things like that. I mean, it's interesting to see, but at the end of the day, like, cash speaks, I don't think there's anything to be worried about, to be fair. The Premier League has had Middle Eastern owners for a long time. We've also had like a billionaire owner in Liverpool as well. I mean, LeBron James has been an owner for a long time. Like you said, Arsenal to Cranky Sports Enterprises, right? They own a lot of, I'm a huge fan of them. They own a lot of sports franchises.
Mm-hmm.
So I just think it's going to be fine at the end of the day.
Business as usual.
Yeah. But I mean, I think it opens up an avenue for even more ownership at Liverpool. It is 30% initial buy-in, but I think they're slowly, knowing how the way these deals work, they're going to increase their stake in the club and maybe take it over fully in the future. So
yeah, sounds good.
I
I
mean,
think I think I agree. It's just it's entertainment, it's sports. We love it, and they want to have a episode, which is fair game.
yeah. So we don't go away in any episode these days without speaking about AI.
Yeah.
And Nvidia, the major drivers, raising 500 billion. Is like,
Like,
I wrote 500 million in the note I sent before Biden caught my attention to it, because like 500 billion is like unbelievable amount of
I think
capital that this AI firms or like AI industries raising or like dealing with at this moment. So 500 billion from Wall Street giants to basically finance buying into their chips for their customers.
it's just been crazy. I think it was Dr. Ola Brown on Twitter that was saying that what's the GDP of Nigeria again?
For this Wall Street firms to be able to like pull together that kind of capital for the AI industry is like unbelievable.
Well, I think it's mainly because, again, the future of compute is smaller, more efficient chips, and it's almost like the upside is unlimited. Hence why
that's what they say. That's the sales pitch. That's the sales pitch.
The upside is unlimited. Hence why a lot of people want to really go in. But we continue to watch on. My personal opinion is that there's likely some busts coming up. But the question is, who is going to go bust and when will it occur? I don't think that it's the hardware manufacturers that will go bust, because again, with these chips, they can always be used for other things. So if you're not using it to, create data centers for AI companies, there's also these chips that can go into gaming. But given the direction of personalized super intelligence, wherein a lot of us now use Claude to code, a lot of us now, use Claude co-work, amongst other things, it means that the consumption demand for computing resources would only get a lot more, right? And based on that, that's where the upside is.
Yeah. So I think Nvidia is good for it. That's another thing. I think Jensen Wang was saying that they can backstore about $125 billion of such deals. So they are fine. Just they needed external financing, and it's everywhere in the world. I was watching a video on CNBC yesterday of SK Hynix, and they are building out like 3 mega fabs in South Korea and one in the US, and they are spending not of 80 to $100 billion just on it. And they were interviewing the CEO of SK Hynix, Chete, and it's like chips have always been, driven by cyclical demands. What is it different this time? Why are you putting so much money into it? He said, because they believe that the demand for AI and AI applications will far outweigh whatever they are investing in. That is the thing. And I think they might be right. To what extent is now what remains to be seen, but I think they might be right.
No, again, the future of compute is best left to the imagination. There's a lot that is going on there. We've never spoken about robotics, for instance.
Yes.
There are elements of, automation, personal household automation that is not yet being delivered at scale. Imagine when it then becomes delivered at scale, wherein you have a house in Nigeria and you're able to just automate certain things. And all of that is going to require chips. It's going to require, compute consumption. So that's why I say that the upside is really, really and truly unlimited.
For me, I'm a more conservative person. I think even in the scenario where there's a bust, even in the scenario where they are wrong, right? All these estimations like wrong, I think they're going to make it right. Like somebody has to hold the bag at the end of the day. It's just an unbelievable amount of capital that has been invested into these ventures that it has to be. You cannot, at this point, I've been seeing the way that a lot of these AI CEOs, they talk about the future in absolutes. There's no sort of probability or probabilistic speaking in that statement. It's like AI is the future, blah, blah, blah is the AGI is blah, 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 blah. And it's going to be driven by, it's not, we think it to be driven by, no. Every statement that they make, everything in their manifesto is like absolutes. Like we do know these things. And
also considering that they are also beginning to think of getting energy, consumption outside of the planet. And that is going to take a significant, groundbreaking technological inventions. So I would say their confidence is sort of backed by what the outlook currently feels like. And
not a lie. Yes, not a lie.
That one is a lie.
High in this.
We don't mind going to energy on Earth.
Just like, yo, because if you say something like Mars to me, all I know is that it's a planet, right? It is, and I know that it is uninhabitable. It's like space, this, space, that. I might be wrong. We'll see in decades to come how those explorations work and if these investments are able to make returns. Anyway, I think we've come to the end of one thing. But in case you are wondering why Sheyi has a mic and headphones, because he has a podcast. Sheyi is the co-host of the Worth Reading podcast.
Oh, nice. Maybe you invite us over there someday.
Yeah, maybe maybe someday.
They are taking a hiatus like us, We always say we are back, but I want to like stand on business now, like, and really give it a push.
Yeah.
Maybe we would also learn from you guys. Give us a push again.
Thank you so much, Sheyi, for joining us on this episode.
Yeah, thank you for the time. Thank you for having me, and I hope that I've been able to share quite a number of interesting points for
definitely. You're going to come back because I've learned so much.
Yeah.
Thank you so much. Bye, everyone.